Welcome to Digitized Spotlight, your lens into the best builders in consumer crypto. I'm Amanda.
And I'm Winnie. On this series, we'll explore the latest trends emerging in consumer crypto and chat with those building at the forefront. In this episode, we'll explore how retail in this cycle has been trading and what new platforms they're using for on-chain execution.
To guide this discussion, we bring on Jai Prasad, the founder of Definitive, a new cross-chain platform that offers advanced trading products for retail while completely abstracting the chain with which they interact. We talk about how retail this cycle is getting into meme coins, how to build a better consumer experience for both degens and new traders, and how this is a wedge for institutions.
Over the last 2 years, we've begun to see how alpha is now greatest on-chain. New assets list and trade in the billions on-chain first. However, from a consumer perspective, execution and complexity is growing exponentially with soon to be hundreds of L2s and rollups, each with multiple liquidity venues. This is why I'm so excited to chat with Jai, who's rewriting the playbook for how users should trade on-chain. Hi, Jai. We're super excited to have you on this episode of Digitized Spotlight. For those of you who don't know Jai, he's the founder of Definitive, which is a new on-chain execution and trading platform for consumers, DeFi whales, degens, and institutions. Previously, he started Token Analyst, which later sold to Coinbase. And then at Coinbase, Jai led a whole team that basically built a lot of the core infrastructure for consumers to send, receive, stake, earn, borrow crypto assets. So he definitely knows a thing or two about cross-chain execution. So Jai, I'll let you introduce yourself and tell us a little bit more and listeners more about Definitive and kind of your journey there.
Thanks for having me. Super excited to be here. Heard this is the hottest crypto podcast in the market. So glad I'm here as an early guest. Just maybe quickly about my journey in this industry. Have a kind of product engineering background. Got started in the industry back in 2017. I started a on-chain data company back then, one of the first ones in the space. Probably was just a bit too early with that startup. I think on-chain data really picked off in 2020, 2021. But we ended up, selling that company into Coinbase. As Winnie mentioned, I, led various initiatives and teams at Coinbase, and but mostly, worked on new chain integrations, DeFi integrations, staking. So, a lot of the fun crypto stuff that users can do. It's probably what myself or my team worked on while at Coinbase. And then I was really, early into DeFi. I was an LP in Uniswap in 2019. I was, farming Compound and Wi-Fi and all those early kind of DeFi launches in early 2020. And so kind of while I was doing that, I was also working on a lot of the institutional infrastructure at Coinbase that professional funds and family offices and folks like Michael Saylor used to trade in CeFi. And basically I, met my co-founders, Dennis and Blake there. And we kind of had this vision or hypothesis that, in the next 10 years or next decade, on-chain economic activity would grow exponentially. But the same tooling, the infrastructure that the bigger players had in CeFi was absent in DeFi. And we had built that same infrastructure in CeFi. So we had a really good idea of how, big money traded. So that was kind of the genesis of vision behind Definitive. So we started with kind of a simple mission, and that was how can we make, DeFi yield and trading as simple, seamless as possible so that users don't have to worry about kind of chains and gas and MEV and all these blockchain idiosyncrasies, right? The gas is different on Solana than it is on AVM chain. And that's kind of how we started. Kind of initially, we were a little focused on the high net worth and institutional audience, but we soon found that the retail audience and the degens, the individuals, had the same needs as the institutions in trading in DeFi. And oftentimes, the retail and the degens were the first movers into a lot of the DeFi protocols. So basically, that leads me to Definitive, where our vision now is to democratize access to sophisticated on-chain execution for everyone. Everyone from, everyone connecting their wallet and trading $100 to, an institution like BlockTower trading 100 million should have access to, the same tooling and infrastructure that people have in CeFi. So it's a quick overview of Definitive.
Super helpful. You touched a bit about your personal experiences in DeFi and the origin story for Definitive. Can you share more about like the current product offering and what this is enabling for retail traders that you didn't have, let's say, last cycle before Definitive launched?
Yeah, good question. So I guess I would say first there's just what has changed in the market that has made Definitive a must-have, which maybe wasn't as much the case last cycle. So, last cycle, DeFi was, primarily on one chain. It was on Ethereum. And, everyone was trading on Ethereum, and there was maybe, Uniswap, Curve, and then maybe one or two lending protocols. What's happened now is that DeFi landscape has changed. There are hundreds of chains. Yeah. 100 L2s, L3s. Each L2, L3, has their own lending protocol and their own DEX, and then there's non-EVM chains like Solana and Sui and Aptos, and parallel EVM chains like Monad. So basically, there's immense fragmentation of liquidity, and what that means is that that makes execution really hard. So each chain has its own idiosyncrasies, and understanding those idiosyncrasies and standardizing them is very complex for everyone, from the individual user, to the big fund. And kind of the analogy here is, in say 2018 or 2019, there were a lot of different CeFi venues that popped up. There was Binance and FTX and Coinbase and Kraken, and Coinbase existed, but there was liquidity fragmented across all these different CeFi venues. And so there was companies that came up like Falcon X or Talos that unified that liquidity and provided it in a simple, accessible way for everyone. So what happened in 2019-20 in CeFi happened in the last year or two in DeFi. A lot of fragmentation, but at even more exponential scale. Like you all are both probably invested in roll-up as a service companies, and everyone's going to launch a roll-up.
Yeah.
What does that mean? If you want to buy an asset, you're now going to bridge, right? So the landscape has changed, which has made something like Definitive a necessity. And what we do is, the vision is simple. We want the user to trade any asset on any chain and never have to worry about stuff like gas or MEV, or what DEX they're trading on, or what lending protocol they're accessing. We think of it as fully chain abstracted, a fully chain abstracted trading experience.
Yeah, the number of my normie friends who ask me how to trade on, say, like a DGen L3 or even just L2s, and they just don't understand that concept of how to get it on specific, even moving it from their Coinbase to specific chains and then bridging it is just so foreign to them. That's something like Definitive could be super helpful, especially if you guys integrate L2s and even maybe L3s in the future as quickly as possible.
Yep, we hope to do that.
Yeah. One thing you and I talk a lot about, Jay, is kind of in this cycle, how alpha is increasingly greatest on chain first, whether you're buying meme coins like Bodin or DGen or Bonk, or just even waiting for these highly anticipated venture-backed companies to drop their tokens and their token launches. A lot of the investable opportunity set for retail first happens on chain and kind of trades in the billions on chains first before even getting listed on centralized exchanges. So I guess the question for you is how do you think about Definitive's positioning, given all this changing market dynamic, and why you think it could be the dominant platform for retail consumers? We're personally, Amanda and I, we talked to a lot of companies that are obfuscating this for a lot of retail traders that are focused, entirely either on meme coins or something else. But how do you think about Definitive's role as it has that retail approach, but also is more institutional in some ways?
Yeah, again, great question. So maybe I'll just start again with the trend that we've seen, right? Which is, as you alluded to, alpha is greatest on chain, and we talk to funds, and now that there's an ETF, their mandate is to beat Bitcoin or Ethereum. No one is, you can't charge 2 and 20 to deliver Bitcoin Ethereum returns. So what does that mean? You need to get into you need to find alpha and find new assets early. And by the time something is listed on CeFi, goes through like the Coinbase or Binance listing process, it's usually too late. Maybe there's obviously still upside, but you're probably not going to hit the 3 to 5 to 10x. And these 3 to 5 to 10x opportunities, aren't only in meme coins. There's also a lot of, I would say, like mid-market coins that are available where teams are executing and shipping, and they've crushed it just through on-chain. So that's just like a general trend. And what's nice about that trend is both the retails and the instos are on a level playing field there. You personally can log in to Definitive or go to a DEX directly, do some research, and buy these assets. So where we kind of play in this market dynamic is now if you say that you have decided that you want to buy, I don't know, like let's say a few $100,000 of degen, right, which was very popular, and I know you all went to FarCon recently. Kind of like, how do you do that?
I'm not buying a few $100,000 of degen, first of all. Size meme coins very differently. I'm kidding.
Fair enough. But we have people who are, they're trading hundreds of thousands of dollars of meme coin. But let's just say you want to buy 100K or 200K of some asset.
Yeah.
You can't actually just go and click buy for 200K on one DEX. That liquidity is split across maybe various DEXs and maybe two chains, maybe base and degen chain. Now, it maybe for $100 or $200 doesn't matter. For 10 or 50K, it actually does start to matter. You get hit with slippage, price impact, some of these DeFi idiosyncrasies. So what happens with Definitive is you kind of just come into our platform and you just say, I want to buy X with Y. And so we support the ability to buy any asset with any asset. So you can buy degen with higher or degen with lower or higher to lower. A lot of platforms don't do that, right? They only let you buy with USDC or ETH. So that's kind of one difference. Second is we have what's called a smart order routing, where we figure out the best way to buy degen. So that might mean I'll buy $10,000 on one DEX, $10,000 via market maker, $10,000 via like a solver, $10,000 on another DEX. So we have like algorithms that figure out the best way for you to buy something and execute it. And finally, you don't have to worry about gas or anything. We handle the gas and abstract all of that away from you. You just click what you want to buy, what you want to sell, and our algorithms just go and do it. And then finally, and most importantly, when you do trade in DeFi, you actually have no idea how much you bought, how much you sold. You have to go look at like an Etherscan transaction link. So we have what's called as a post-trade report. It shows you exactly how much you bought, what were the fees, et cetera. And this is really nice because, if you are in the US or your fund, you have tax season coming at the end of the year, and we make that easy for you.
Yeah, I guess the key here for like consumers is like, they don't really care where they're buying it from. They just want like 100K, 200K on a certain token. So like you make that easy for them. One platform, eliminate that friction.
Exactly. They don't have to bridge. That's the other thing. And then Definitive trading feels like CeFi. You just like click buttons and do it. You have to sign. So we basically thought about the entire life cycle of a trade, because I've done thousands of these and we've just tried to make every part of it better.
Got it. And then you had mentioned the fragmentation of liquidity, alpha being on chain. What else do you think are the trends that are defining DeFi this cycle? And are there certain trends you're excited about and building for beyond those? Other ones that you're cautious about?
Good. So good question. So maybe, some other trends are, one is there's more, DeFi is becoming hardened and more mature. So there are more primitives, sophisticated primitives coming out. One is in the lending space. So there's this whole new trend of modular lending protocols. Some of the new ones are Morpho, Euler, Ajna, et cetera. So that's like a new trend that they're redefining, lending. They're taking what Aave and Compound did and improving different aspects of them. Second is there's derivatives are really growing on chain. So that's another trend in this cycle. Derivatives, as you might know, in CeFi are huge. They're 10x the size of spot. And those markets are really like starting to explode, on chain. And, degens like leverage, degens want to borrow, with lending protocols and degens want to lever up. So those are kind of two trends that we're keeping track of. And then I guess three is, there's this whole cultural trend, which, y'all are where you guys are really the experts, but, we're seeing kind of the rise of meme coins as a go-to-market strategy to attract liquidity, to attract users. We're seeing more social fi, such as Fantasy Top and Friend Tech. And, for us at Definitive, we're actually agnostic of the asset. We just want to build the best way to trade any asset on chain. And that could be a derivative, that could be a Friend Tech key, that could be a Fantasy Top card, that can be a spot asset. And also RWAs, which are also huge. So I think, the general, for us, it's really like, it's just about prioritization. Where do we start? Where do we go? Eventually, we want to support all these things, but, we have to prioritize and solve one problem first before going to the next.
Yeah. One thing we didn't talk about earlier, Jay, that I want to circle back on is kind of the yield product that you guys have also built in addition to the trading product, which we kind of focused on. I mean, it'd be helpful for you to tell the listeners what inspired you kind of build that from your own pain points of last cycle farming some of these different ecosystems, and like what you had before Definitive, what did you have to do in order to kind of get those yield strategies? And now with Definitive, how easy is it for everyday consumers who, are not as, advanced in DeFi as maybe you are to kind of access those same strategies?
Yeah, great question. So generating, yield in DeFi pre-Definitive is quite a hard process. You go to a protocol, you have to try to understand how it exactly works, how you can generate yield. You deposit assets in this yield thing. Then you have to monitor it every day. Maybe you have to claim some token every day, sell the token. Sometimes you have to rebalance your position because it got out of sync. The TLDR is yield is complicated, and each protocol comes with its own nuances and the way it operates. Pendle is very complex and very different from earning yield on like Uniswap or Curve. So there's a spectrum. I, as mentioned, I started as like a, yield farmer, as they like to call it. It was like a 24/7 job where I had to just be up all the time, monitoring my positions and rebalancing them and, making sure I didn't get rugged. And I got rugged many times, happened.
Favorite story is like when you had to leave dinner one time because something was happening.
Yeah, it's happened a few times.
What happened? One time. I actually don't know the specifics. I know you like.
There were a couple. Yeah, there was a couple times stuff happened. One time, I was on this chain Moonbeam, and the bridge they used a Nomad bridge, and the bridge got rugged. And so there was like a 1 hour window of where you had to swap out your assets to another asset to get out. Won't go too much into the details, but it was like very time sensitive to get out of the position, and I had to like run and kind of go do it. Other times I've had like positions in Aave and stuff that get unhealthy because the market moves or an Oracle moves. So anyway, like again, yield in DeFi is not free. It's not free money, far from it. And understanding how it works is really important. So with our yield product, we abstract away all this complexity and make it one click. So the user just deposits assets in a non-custodial vault. And then our system monitors the underlying protocol, looks at the various risks, and manages the position on behalf of the user. So it's like an intents-based system that runs certain intents for the user. The user logs into their app and they just see number go up, hopefully. So basically prevents the user from losing money, getting rugged, etc.
I think that sounds useful. So you previously founded Token Analyst and then sold that to Coinbase. What do you think are some of the learnings that you've had as you're starting a company for the second time? And how have you kind of changed your approach with Definitive?
Yeah, I mean, great question there. So I guess one thing I definitely learned last time around is being early is being wrong. And you don't want to be, you could have the right idea, but if you executed too early before there was a market, you're wrong. There's no prizes for being early. So I think that's kind of one learning. I think second learning, just being in crypto for so long is, you know, actually the best time to build is the bear market, not the bull market. So as Winnie might tell you, we started Definitive honestly when FTX crashed 2022. Luna, it was probably the worst time ever to start a DeFi company. But uh, from the outside, but from the inside, it was actually the best time because it gave us, a year plus to just put our heads down and build while the tourists were not in the market and they went away. And now, now the market's up, you'll see a lot of people come in and they'll try to all start companies again. But it's nice that we've been building something over time. I think three is, there's always a new trend in crypto. There's always something that's hot for a month or two that goes away. I think it's just important to kind of have, a long-term vision on why you're building what you're building and try to stay true to it and, not try to not FOMO into every new trend that you see, right? That's probably one of the worst things you can do is just keep changing your strategy and pivoting over and over again just because you think there's a new hot narrative. So, I think you just have to have belief in what you're doing, and sometimes it takes time. Like sometimes you'll initially maybe have a few hundred users, not tens of thousands of users. But if you believe that those users are getting great value from your product, and that will, and you believe that the market will get there eventually, it's worth sticking to the plan. Some good examples there. There's like OpenSea is a good example from the last cycle. Obviously, things haven't worked out as well for them this cycle, but they were just a 2-3 person team that is just building over and over again, focusing on this one thing. And then this cycle, a good example is Magic Eden, where they started with just kind of NFT trading, but then they quickly realized the trend in Bitcoin, and that was like more of a light pivot where they're like, okay, there's this new market, we've built all this tooling and infrastructure, like let's go capture that. So an analogy for that with Definitive again would be, right, let's say RWAs get really big and people want to trade them. We've already built this trading infrastructure. That would be like a nice, light, easier pivot for us than doing something completely different, like a social app, for example.
Yeah, I like the focus, and there's definitely very ephemeral topics and themes that pop up in crypto every like 2-3 months. So it's just like prioritizing what makes sense. Another thing I want to talk to you a bit more about is like Base. I think both you, like you mentioned, you and your co-founders, you guys all met at Coinbase. So the Coinbase DNA is very strong within Definitive. I'd love to better understand how you guys think about your alignment with either Base. And because just from our perspective, Amanda and I, we look at a lot of consumer crypto companies, and Base has kind of emerged in the early days as like a consumer chain with Farcaster alignment, Blackburn, and a few other notable consumer projects. But with more consumer activity, there will naturally be more trading and more degen behaviors, and that kind of segues into Definitive. So I guess we'd love to get your thoughts on that and how you think about Base and that alignment.
Yeah, I mean, listen, well, if you just removing Base from the equation, like what is Coinbase? Like Coinbase is a trading app. The majority, 80 million users have signed up to Coinbase primarily to trade cryptocurrencies, right? To make money. That's it. Like that's the number one reason why someone logs into Coinbase. It's to make money. Now Base has started obviously with kind of, as you mentioned, social side, and they're doing some great work for UX, etc. But I guess my take is that those 80 million people want to continue to make money, and if Coinbase doesn't offer them great assets or great opportunities to make money, they'll leave and they'll do it somewhere else. And so I think while I think Base starts as a chain which is really crushing it on the social side, people will want, they'll hear that their friends made a ton on degen or higher or any of these assets, and they'll want to access them as well. And I think Coinbase obviously realizes this potential. And so, our bet is Coinbase is going to direct those 80 million users on chain. And I think that's where, where Definitive kind of comes in, right? We're in a way building an equivalent to like a Coinbase Pro, or what they call now is a Coinbase Advanced Trading on chain. And those users, and we're trying to really build a UX which is very similar to what you'll see in CeFi. So users can come onto our platform, access these assets and trade these assets. kind of the same way. So I think it's just a matter of when, not if. And we're aligning ourselves closely with Base, and we're working closely with their team, and we're also getting ready for on-chain summer, as the kids say.
Awesome. So one of the things that we've been discussing a lot on the podcast is how consumer user experience has been improving over the past few years. And this is things like cheaper L2s, embedded wallets, Coinbase launching their smart wallet. So have any of these infrastructure upgrades been important in how you're building Definitive? And is there still infrastructure that needs to be created?
Oh yeah, great question. So, I mean, infrastructure that's been awesome has just been, one is just the L2 fees. We on mainnet, we mostly just see insto larger clients, but on the L2s, it's more retail, because you don't want to, like, a transaction's $40 on mainnet. So you will see clients putting in a few $100,000 orders. On Base, we'll see. So the barrier to entry, the gas fees have definitely lowered the barrier to entry and made it easier for people to try crypto. Then on kind of the wallet, infrastructure, I would say it's still evolving. I think there's many different approaches. There's kind of the account abstraction type wallets. There's the smart wallet. There's just the smart contract wallets, which we use right now. So I think that is evolving. I think the main pain point right now is still authentication, and mostly still requires signing. But I think the passkey authentication that's coming is going to be a huge, huge, huge game changer, because a lot of the trouble we see is, people like sign up with one wallet, but then they connect with a different one. They can't sign, or to trade, they just want to trade without signing. And we've done a lot of work to make the UX better, but I think using like biometrics, two-factor auth, passkeys, etc., and making it more like just logging into some other app will be super helpful. And you can have tiers. If you're moving money in or out of some place, you can have private key signing. But if you're just taking some small actions like interacting with an app, or trading like something of lower value, it could be the barrier for security could be different, could be lower. It's a threshold. So I think those are, areas where, I think we're really, excited to build on. I think, the wallet stuff it's still evolving. I don't know if there's a clear winner or a clear, basically solution that we should choose yet. So we're just, looking into it and taking it day by day.
Awesome. I guess to close this out, we'll do a few rapid fire questions. Ready?
Yep.
Favorite meme coin?
Ski mask dog.
What? I haven't heard of that one.
Yeah, ski. Look up ski, SKI.
NCA. I'm kidding, guys. Hot take about current DeFi meta right now.
Ooh, I pass. I don't know.
Favorite yield strategy on Definitive?
We have something called hyper staking, and you can earn 30% on CBE on Base.
Cool.
Awesome. Well, Jai, it was great to have you on Digitized Spotlight. Where can listeners find you and learn more?
Oh yeah, you can find me on Twitter. My Twitter is JAI_Prasad17. Just follow me for hot DeFi takes that I blanked on during the rapid fire session.
Rumor has that you have some hot DeFi takes you're going to drop on Twitter.
Oh yeah. I guess hot DeFi take. I think the fine. I thought of one actually. I think L2's bridging cross chain is dead. The future is going to be chain abstraction. People will never ever know they're on Arbitrum or Optimism or Base. It'll just be fully abstracted away. So I think that's going. It happened in the internet era, by the way. There's like 20 different underlying protocols, and at the end of the day, you just use a client like Gmail to send messages. You never know what the underlying protocol is. So app layer gonna capture value over the infrastructure layer. That's the hot take.
Ooh.
Yeah.
Love it. Cool.
That's the anti-VC take.
Thanks for tuning in. Hope you enjoyed our conversation with Jay. He and the team are really paving the way for this new generation of retail consumers to better interact with otherwise clunky and fragmented DeFi experiences.
Agreed. It's also been great to learn how Jay is rethinking what an on-chain Coinbase could look like in this cycle. Follow us as we chat with more founders building at the intersection of consumer and crypto.
Bye.
Bye.